We have full data to prove that regen ag is a more profitable business model than the other. I would short against fertilizer companies. I would bet against them, and that's what I would do. And then I would go and hunt them for over fertilizing our land, polluting our food, and they're damaging. They literally make money on damaging. So that's completely wrong.
Regen ag is more profitable. Our guest of today has the data to prove it and is putting serious money to work to scale regen across Eastern Europe. Some numbers: over 70 million euro loan to farmers and over 13,000 individual investors have invested through them. But the gap is much bigger than that, over 60 billion a year, which means we need institutional investors, which have invested through HeavyFinance already, the European Investment Fund, for example, and others. And why are banks not stepping in? Because small farmers don't fit that criteria very well. So we need new FinTech solutions and scale. This could be quite a standard FinTech play in agriculture if it wasn't for a super clear focus on regeneration. Why? Because it's more profitable and thus makes farmers better lenders. And yes, we're also talking about carbon credits. Our guest of today is placing a big bet in that space. And yes, we'll also be talking about carbon credits. Our guest of today is placing big bets in that space, and we explore why and how. This is the Investing in Regenerative Agriculture and Food podcast, where we learn more on how to put money to work to regenerate soil, people, local communities, and ecosystems, while making an appropriate and fair return. Welcome to another interview, today with the founder of HeavyFinance, funding farmers who fight climate change. They provided over 70 million in loans for farmers, clearly innovating in a super sleepy space of agri-loans. Welcome, Laimonas.
Hi, Koen. Thanks for having me, and pleasure to be and speak with your community.
Yeah, so we always start with a personal question, understanding or trying to understand, which usually is a long and winding road. Like, how do you find yourself in an office these days focusing on carbon farming, focusing on agri-loans, and focusing on smallholder farmers or smaller farmers, let's say, not the gigantic ones, in I think about 10 European countries now, which I don't think was a path you could have picked 10 years ago or 15 or 20 years ago. So I'm very interested. I'm asking this question always because I'm interested how people with experience elsewhere get into the space, why they get hooked, excited, and because it's not the easiest one, as we'll get into. So how come you spend most of your waking hours thinking about soil, thinking about loans, debt to equity ratio, collateral on the farming side of things?
Yeah, that's a very good question. And I sometimes think about it myself, but
probably often. Yeah.
I always had a passion for finance and building business. So that's how I arrived to this, because in my career, at first I did payments as an entrepreneur, then I did lending to SME companies in this region where we operate. And then my friend explained me that agriculture and small and medium farms, they lack financing, which was very counterintuitive, right? For me, a person from city, I always thought that somehow had this impression that farmers, they buy a flat each year after the harvest and they have these modern tractors and everything is perfect there. But the more he explained me, the more, for me as a finance person, this seemed as a very interesting industry to innovate. I thought, okay, let's give it a chance. Maybe they actually lack financing. So then I started digging into the reports. And truth is that around 60 billion euros is missing for SME farmers in Europe. And
is simply missing, meaning that
that's like a
yearly, working capital loans to do things.
So that's very significant. That's a very significant number. And also for me as a finance person, I thought, but these guys have a lot of land, a lot of collateral. They cannot pivot. You lend them money, they cannot pivot. So these small things for me invited me to the industry, right? The moment I entered, I realized how large it is. It's pretty much like a real estate industry. And yet there's so little of innovation there. So that's me innovating in a sector which I didn't know. And yeah, it's very interesting. And then you build as an entrepreneur and many other things happen, but that's how I entered the space, and I'm very happy I'm here.
And it is such an interesting industry, but not even such a big leap from what you were doing before, like SME financing and loans. Like a lot of these farms are SMEs on the S side mostly, but they have a lot of collateral. And so there is, from a finance perspective, it's an interesting case to look at compared to maybe a shop somewhere, or maybe like some office that run, there's more to it if something goes wrong. Of course, margins are very different in many cases. So what was your first experience looking at some farms with like your finance glasses on? And what did you see, and what opportunities did you see there?
At first, what surprised me is that how cash intense the business is, how little room for mistakes there are, right? So the farmer, when he makes a choice what to plant for next year, he or she single-handedly takes the risk, always. No one else, right? So these guys have to be a perfect agronomists, perfect tech owners. All these tractors with GPS and everything, it's a technology which you need to run. Then they need to have good planning skills, be a very hardworking person, and there's so little room for a mistake. Maybe that's why the innovation is happening relatively slow. And talking to your community on RegenAg, what we realize is that it's obvious that the farmers actually want to go there, that they understand that the better business model is RegenAg, but they do not have room for a mistake. So you need to create a buffer for them. Someone needs to provide funding for that so they make a change. So that's what we learned. That's where we moved with the organization. If we want to make money, if we want our farmers to make money, we need to push them to the better business model, which is RegenAg, provide them education on that, but also the main thing, the tool, which is finance. So that's where we focused on, and that's what we do. So not sure if I actually answered your question.
No. And I want to know, because it wasn't the starting point, the regen piece, like the starting point. That's why I think it's so interesting. The starting point was, let's provide finance to small to medium-sized farms that are lacking other options. And we'll get to what the options were, probably some regional banks, some like because you said this amount is missing, meaning that they currently don't have access to have access to farming. What were the alternatives for people you worked with or work with to finance these seasons? Because they're mostly arable farms, very heavy costs at the beginning, seed planting, unknown reward at the end, and a lot of risk in the middle. Like what are their alternatives of not working with you? And then we'll get to how the regen piece entered the stage.
So that's a very interesting observation, which we figured out as a finance guys. The question is why the banks are not lending money to small and medium farms. There is a collateral. Agriculture is an industry. We take 5-7 year cycle. The loss rate of capital in agriculture is very low compared to other industries, let's say real estate or transport. So the risk profile is smaller, but the access to financing is as well smaller for a farm. So that's what was very good.
Weird and counterintuitive. Yeah. And so why? What is
And then comes the regulation of European Central Bank, right? What these guys do, they push banks to score clients cafeteria, and farming is scored in the same way. And farmers, they don't have monthly cash flow. What they don't have is predictability on how much money they will actually make at this exact period. So what happens, farmers really tend to be late by 90 days. For them, 90 days description means nothing, right? If the sun is not there, they just lose the phone and that's it, right? So how I pay? I don't have money, so I don't pay. I will pay later. That's their approach. But for bank, that doesn't work. Then there are capital adequacy ratios, blah, 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 blah. That makes unprofitable to serve the farmer, even if they will pay back, but still it ruins statistics of the bank. So what they do, banks focus smaller and big ones.
The big farms, because they fit more into their criteria and their
90 days. So this 90 days is what is important, right?
Okay. And so you're saying actually inherently, if you look at the longer cycle, and we get to how climate change might be ruining that cycle partly, but if you look at the longer cycle, you're in a region which has incredible soils. Eastern Europe, of course, is a big region, but many parts of that is the breadbasket, has been for millennia and centuries. And we get why that's so interesting. But if you look at longer cycles, you're saying actually it's less risky than a cafeteria or less risky than a real estate investment, but you need to approach it differently. You might need that 90 days. You need a bit more flexibility. You need another approach than a bank is forced. Maybe the bank even wants to, but it's forced by European investment or the European Central Bank to to book its loans in a certain way and to look at risk. And basically, with that inflexibility, you don't want to touch small farms, even though they might be interesting as an investment opportunity or loan opportunity. So they're completely ignored. That's what you're saying.
Yeah. So to summarize what I said, so we did the math, and if you're a traditional financial institution, a bank, for you to provide a loan which is smaller than 50,000 euros, is you make direct negative profitability. So instead of making money, you lose money each time you provide such a loan. So that's why, and the farmer, let's say it's a small farmer who has 200 hectares. The farmer doesn't need a new John Deere or new class Lexion, 200,000 euros. No, the guy needs a 5 years old tractor, which costs 45,000 euros or 50. And that's good enough for his business. That's where the gap really exists.
And so how do you overcome that gap? Of course, with your FinTech background, you've done loans, smaller loans to SMEs. So how do you build in that flexibility? How do you make sure that they're not getting punished for 90 days of not paying, but of course still pay? Because otherwise your loan book looks like, what's the innovation there, or what's the approach there as someone who comes from a different space?
Just to be said, not much of innovation there on that side of things. It's just that the regulation comes for the banks if they take deposits from people. Only then the regulation.
They need that, yeah.
And for us, as we don't take deposits from people, we can blind ourselves from these results that, I don't know, 15% of the farmers are not paying higher 90 days late. So for us, it's not that big of a drama. So that's what allows us to get into the deal with the farmer, understand that most probably it might get late at some point, but still it works for our math, right? So there's just a different approach on that side of things.
And so how do you, you see that opportunity, you see that gap in the market. What's the next step? How do you approach that? How do you find farmers? How do you score those loans? How do you finance them? And how do you start that little cycle of getting money to smaller farms? And then we get to the regen part, but how do you even start that mechanism, let's say? And when was that more or less when you did your first loan?
So the first loan we did, I think 4.5 years ago. The idea was to pretty much build up the credit scoring and understanding what can you finance, what you cannot, and then attract as much institutional capital as possible. So only now we started unlocking the capital. So last year we launched a small fund with the European Investment Fund guarantee, meaning that if the farmer is not paying, then the EIF provides a guarantee and rewards the capital provider. We're launching a fund ourselves, the big one. So now what we focus is that we think we know what we can finance, what we cannot. Now we need to scale it to appropriate level. So even though we did around 70 million euros of loan already, we think that
70 people, just 70, not 15. Yeah, just to frame it.
Yeah. And
which is a lot of money.
That's little compared to the opportunity and the size. It's very little money, and only now we're starting to increase the amounts. Now we're doing close to 4 million euros per month. And by the end of the year, we think we will be doing around 8 million euros. And now the idea is to take the capital and provide it to the farmers.
And a few different roads to go from there. One is why institutional capital is so important. You've been supported by, or you have 13,000 investors, smaller ones, more on the crowd lending side, let's say. But from the first moment you said, no, we need institutional investors on board. Why is that? And does that bring some of the scrutiny or some of the criteria that banks have to deal with as well? Or is that a completely different game you're playing? Because you had the European Investment Fund and quite some others as well starting to lend through you, let's say, to SME farmers.
So look, the gap is 60 billion per year. That's a lot of money. And
it's a lot of savings. Yeah.
It's a lot of savings. And I don't believe that the retail part can actually provide this amount. So that's the logical idea, to go for big money and attract the big money and support the farmers. Otherwise, HeavyFinance is not created to be a small company. So we think that we can be a Revolut for farmers, give us 10, 15 years, and that's fine.
Revolut, one of the new banks, not new anymore, but definitely doing things completely different. And then when did the regen piece, let's say, come in it? Or when did you, because 4.5 years ago, and of course there was already quite a bit of regen hype. You mentioned it before, it seems to make a lot of sense clearly from a financial perspective on a farmer level, but they need cushion, they need investments, they need help as well, agronomic advice. So when did, let's say, the word regen popped up on your screens and in your fields for the first time, and why is it so exciting?
So once again, I'm a finance guy. I never planned to do anything with agriculture myself.
There's a plan behind him. If you're looking at the video, you can see that. But apart from that, yeah. But that's why we're hosting this podcast. How do we get more people with backgrounds like yourself into the ag space and really focus on soil? And hence we're having this conversation. So no, there are no excuses. It doesn't matter if you've never driven a tractor, which I haven't either.
And look, if I may, a little bit on a side of
Please.
questions, I will answer this question, how I ended up in Regen Ag, but I really wanted to touch a little bit on what you said. The moment I started doing Regen Ag, got so many pushback from climate community, regen community, like, why on earth you're here? I came here to do money and everything. I'm like, guys, you need people like me. You need finance people. You need, science people. You need climate people. You need all people to work on.
What were the complaints? What was the? I'm curious. What was the pushback?
Pretty much, you are outsider. You don't belong here. And that this year, first impression, come on, it's my earth too. I sold it from your knowledge, I sold it from my knowledge.
That's a good one. It's my earth too. And but did you get pushback from farmers as well?
No, farmers have a very funny cooperation with farmers. Each time I arrive with a white shirt and have literally zero understanding of what's in the soil, they just laugh together with me. But I support them from their other approach. So we get on very well. I don't teach them on agronomy. They don't teach me on finance. We get on well. But yeah, answering your question, now at HeavyFinance, there's around 30, 35 people who know the soil and who know agronomy. I'm not the one here, but there's quite a lot of guys. So 3.5 years ago, I received a call from my current colleague, Violetta, and she asked me the question, can I finance the farmers in their transition from conventional to regen farming? That was her question. And I really knew nothing about it. But the more
you were like, what?
What? Yeah, what is that? But the more I listened to what she said, the more it made sense for me. And what we did, I said, Violetta, I think you're not pulling off this project alone. And I really want to do what you do because it makes sense, right? So we joined our forces together. And that's how we ended up in finance and regen intersection. That's what HeavyFinance is. We have a hybrid business model where we fund farmers and at the same time we do what's called carbon farming and we're technology providing to the farmers. So that's a weird story, but that's our biggest advantage now as a company because we kick in, we talk with the farmer and say, not only we provide you agronomical advice, not only we believe we will get carbon credits for a positive change you do, but as well, we can finance the change. That's what makes us interesting company. A bit tough from the managerial positions, but at the same time, running ambitious finance organization and very ambitious carbon farming organization, but I'm very happy with it.
Yeah, but probably the two need each other in a sense. Your finance operation is generating money and is doing well and growing. I mean, you were mentioning 4 million a month, going to 5, 8, etc. And some of that money can help the carbon piece, which isn't super established yet. It's at least the market side of things, and we'll get to that, isn't ready yet, but is a long-term bet, is a long-term conviction that will happen. And when that happens, it's very interesting. But of course, what many of your, let's say, colleagues or competitors in this space is that they only have the carbon side. And until that develops, they have to keep raising money constantly to cover the cost there, which is fine to a certain extent. But of course, at some point, the market needs to be there for carbon credits. Otherwise, it's just, it's going to be very difficult to build businesses. And looking at that opportunity, first, one step back, is there any fear in you or some of your investors, maybe also in general, that some of these farmers that we see that in some, let's say, larger farmers, let's say they have a lot of debt. They have a lot of collateral because of the land, but of course they would have to sell too. And the margins are so thin. Do you think in your context, over-debtness and pumping a lot of debt to farmers is going to be an issue, or is actually not an issue at all because the space is just so large?
That's a very good question. But let's take a step back. Why the margins are so slow? Well, so small. Because the soils are depleted.
Even in your region? Yeah.
Everywhere. So we did a really extremely large soil sampling events in Lithuania, Poland, and Ukraine.
I saw that. Agri-carbon, I saw the truck with the drill on the deck in the slides.
Yeah. And we just finished the one in Ukraine, even close to the war zone. So we do quite a lot of field work where we learn about the soil itself. And the reason why farmers are not making money is two. One, they're damaging the soil year on year with the plow. That's one thing, and that's very obvious.
Here's a sentence you never thought you would say 5 years ago.
Oh yeah. You would see my friends when I tell them these things.
You're one of those
nerds.
just like me, annoying people about soil, and everybody's like, let's talk about football. Or
Yeah. So farmers really damaging their fields with the plow. When they switch to no-till or strip-till or manual till, that's the first step on losing organic carbon in the soil, right? So that data we have, and we can prove that if the farmer switches from plowing to no-till or manual till, at least they stop losing the organic carbon in the soil. So that's the first step. Of course, there's all other things. So for us, Regen Ag is a system, right? So the first step is get rid of your plow, and then let's see what happens. But the other thing which we figured out is that majority of the farms are over-fertilized. So farmers are paying to damage their soil.
it's very expensive fertilizer.
And it's very expensive. So that's why the margins are thin, right?
So you're saying not simply, but what you've seen, it's more profitable to farm regen, even if you're not don't have access to, let's say, premium markets, organic, whatever certification. Of course, you might be working on that. You might have, but even if you're in the commodity markets, your costs are significant, and maybe your yields are equal / similar, and thus.
And Kuhn, we have data
better.
for that, and we have data for that. That's where it becomes interesting. So we're a finance organization. So when we talk with a farmer, we know everything. We know what's your financial, what's your yield, how much money you make, what's your margins. And on the other side, why this? What happens on your soil? What crops did you have? So we see everything from the satellite. We don't need much to talk with a farmer. If we put a sample into the soil, after we finished our job, we know everything about the farm. So we have full data to prove that Regen Ag is a more profitable business model than the other.
And this is without carbon credits yet.
Yes, if we add a carbon credits element, if that flies, so that's around 20% increase in profitability of the farm. So
20,
that's
wow.
where we're so excited about this one. Everyone wins. And we have clear data proof to prove that to anyone.
And so what's blocking, we'll get to the carbon piece, but let's say on the land, what is blocking to you and your team to roll this out more widely? Is it the amount of funding you have, or the amount of, let's say, loans you can put out, and thus, let's say, the amount of farmers you can reach? Is it the training side? Is it, I don't know, limited till equipment? Like what is limiting you to reach way more farmers at the moment? We're recording this at the beginning of 25. What's a blocker at the moment for you?
I think we did quite a lot with the limited resources which we had. Currently, we have 700,000 hectares under management, what we call under management, meaning that we provide...
You're the biggest landowner of Europe.
They're
under management, people doesn't mean he owns it. Like you're touching 700,000 hectares. Yeah.
Our farmers work on this in a matter of regen farming. So that's quite a lot. So that's where we get the data and everything. So I think that we did quite a lot of that side of things. And that's where we are learning from that data. Imagine we did soil sampling on all of these. We collected all the satellite data available for 5 years on these ones. We collected all the data from public sources. So we know a lot about what happens when you switch and what each practice actually means. How much impact on your yield does the residue management create, or cover crops, and which kind of crop works better with this crop plan? So I think we did quite a lot on this one, right? What stops us is more farmers adopting regen farming faster.
Because do you have a lot of farmers you work with that haven't adopted anything, or like some steps, or how does it, like in terms of your cohort of your group of farmers, like how do we see it? Are they,
look, our biggest
of course not 100%, but what's the spectrum?
So the biggest market for us is Poland. Soil should be great, or was great. And only it's hard, like in agriculture, hard to say that the data is right, but only 10 to 20% is in regen ag.
Which is probably, that's high in terms of, I mean, it depends on how we define regen and what kind of practices and outcomes, etc. But it's close to tipping point. Actually, if you look at change theory, like if you get above 15, 20, it starts to become, a lot of people are going to see a neighbor that does something, like it's not only the 1 or 2% crazy people that read too many books.
Yeah, it is a system, and it's always an approach. We should define the definitions. What's regen ag for us? The first step to regen ag is lose your plot, leave it. So that's the first step. Then, of course, the crop rotation most probably is there, and then what's important for us, what we teach the farmers is never leave your soil empty,
Bare.
bare, right?
Bare.
Cover crops, but which cover crops is also important. And then the residue management is as well very important. So basically, the switching to no-till, it makes your soil stop depleting. That's the first step. But then to grow organic matter inside, you need to leave organic matter. So that's cover crops, residue management. So that's where our agronomy team steps in and tries to educate the farmers. But in this case, Lithuania is doing pretty well. Poland is terrible. There's a lot of room to improve, and that's good. All we need to do is to speed up. We need to provide, somebody needs to pay. These farmers don't have money to do the change and to bear the risk. So that's where we focus, and that's where we create products. How to make the money flow so the farmers are incentivized to change faster.
And so how do you build that? Let's say a farmer in Poland knocks on your door and says, here's my data of how I've been doing financially. This is what I've done. I've been plowing quite conservatively, let's say over the last years. I have a bit of rotation. How do you finance that transition? How does a typical loan look like? And how do you make sure, the cushion is there, the flexibility is there to maybe weather a few worse years, or at least some kind of shock in the system? Because if I stop spraying a lot of things, if I stop over-fertilizing, not too much happens. But if I cut back on a lot of the chemicals, and depending how bad the soil is, it might be 1 or 2 or 3, or let's say different years. Like, how do you approach that from a finance perspective, and how do you build something that works for me as a Polish farmer?
Actually, we decided to take a bold step and take some risk here together with our community and actually even institutional investors. So what we do is, if the farmer wants to switch from conventional to regen farm, typically that means to buy a new seeder, that direct seeder. So we say, dear farmer, we are ready to provide you funding, meaning that here, take a loan which doesn't have any interest rate. So free money. That's free is very good price, I would say, compared to what they could have.
If you money at no cost, of course, you have to pay it back.
Yeah, you have to pay it back. So then the farmer, in our understanding, becomes eligible or almost eligible to what we call carbon credits, right? The farmer buys a seeder, changes the practice, starts going towards the regen ag system, what we call it. Then our agronomist steps in and provides education or additional support for a farmer. And we see this a very important element, because the other agronomy advice, what typically farmer receives, is buy more fertilizers. So our agronomists don't tell that. Typically they say,
whatever the question is, the answer is buy more fertilizer. Yeah.
So at least they give an advice which is
independent.
Independent. So that
you're on the same side of the farmer and you're trying to improve the business.
Independent and based on data, which we received on a very large amount of samples. So that's important. Okay, so if this happens, farmer changes, then he becomes eligible for carbon credits. And that's how we remunerate ourselves. Instead of taking interest rates, we take the carbon credits if they will ever be received and monetized. So that's a huge risk which we're taking. We believe this will happen, but as of now, we never got any cent from carbon credits. So yes, we are taking guarantees here.
But there's an origination fee, so you get some money in for, let's say, the loan side of business to cover costs there. And then so the carbon credits, let's say they come, we'll get to what do you think is needed for that, but let's say they will come. How is that split between you, investor, and farmer? And how does that work compared to, or would a farmer also could say, actually, I would like to take that risk and I would like to take the carbon, but I will pay, let's say I will pay the interest rate or pay an interest rate. How does that work? If the carbon credits fall at some point, how does the split work and what are you counting on in terms of price and things like that?
So basically, from the farmer's perspective, that's our client, right? So it's important to understand how it works for the client.
Yeah. For me as a Polish farmer, I would like to know how it works.
So for you as a Polish farmer, while you hold my money, while you hold my loan, you don't receive any carbon credit. But if you pay back the loan, after 1 year, you start receiving carbon credits for forever. So for you, not only you get the free money, not only you advance your technology of the farm, but as well you create additional revenue stream. Because when you pay back the loan, there's additional revenue stream coming. So there's a huge incentive for you to make a change now. The sooner you
to pay back the loan.
And as well to pay back the loan. So that's for you. For us as a platform, while you're holding our funds and not paying interest, we take 35% of the carbon credits to be received, and the investors take 65% of these credits. The moment a farmer pays back the loan, investors don't receive anything, and we always receive the same 35% to do the job needed. So you provide more organic carbon in the soil.
And you will take on as a platform the job of selling these credits at some point.
Also, yes.
And so what will be needed? We are in a voluntary market now in Europe. Your bet is that this will be regulated at some point in the next 2-3+ years. We just saw something on Vera and Agrina in Denmark starting to. So what is needed for you and why are you so bullish on this bet? Because you're taking a risk there, obviously, as a company, and your investors are as well. So what is needed to unlock that market and why are you bullish that it's going to happen?
It's to build on an infrastructure, which is, I can't find the word, what is that? Like, it's, it should work, but it's not working properly. My understanding is that there's a lot of reputational damage done to that industry. So when we analyze with the team how we rely on this infrastructure, is we think that if you have a quality product there's always liquidity and there's a price. There are buyers. It's just that the buyers are not for everyone. So what we do in our operations, first thing is that with our green loans product, and then with this zero interest rate, there's a lot of additionality on it. We actually make a change. We actually advise the farmers on how to make these things right. Additional element is very important. Also, the way we prove that the change was done is based on the sampling, like the field work, not only the sapline and everything. So what I'm saying here is that I believe that the product which we create has quality. If it doesn't have quality, we will find a buyer. If we will find a buyer, then everyone's happy.
And are you suggesting it doesn't need to be a regulated market for that? What are you, like, what could be buyers? What are people when will be, actually, let's rephrase. When will be the moment you need to start selling credits, or when does it start making sense? Is that, do you still have a couple of years, or is it now that you started looking around for significant credits? Because there's a lot of farmers you work with, a lot of hectares, which it's not a small amount. What are you seeing currently in the beginning of 25?
As mentioned, we already in the conversations with the buyers for quite some time. And I'm not just saying blunt statements. I think we do have a buyer. Until it's
for a price that makes sense.
Yeah.
For you and a farmer. Yeah. So we don't need to wait for a regulated market necessarily. Would be nice.
But I would love to be in a regulated market. Regulated market means rules. Rules are good for business. I know some people hate rules. I love rules.
Especially in finance, it's nice to have some rules that everybody has to play, at least, let's say, semi-fair. And so you might have a buyer, let's say maybe when this is out, actually there's news, we're not going to talk about it. Then is there enough interest? Do you see, let's say, the interest for the size you need? Or is it like, okay, we're step by step, small amounts, like whenever they come on the market, price-wise, what do you see in terms of hungerness or eagerness and the market side of things of the carbon credits?
As a project developer, what we realized is that the scale is very important. So when you're talking with the buyers, if you want to talk with the properly big ones, have to be at some proper size. So now the size which we love the most is around 100 to 200,000 carbon credits a year. So that's how much we're delivering now. The first issuance, that's exactly 100,000. And the buyers love it. They say that's exactly the amount which makes sense for us to engage in the proper due diligence, etc., etc. So to get to this stage is hard, but to sell million carbon credits per year is well hard. So you really need to grow together with the market. And that's our understanding there. As of now, we're well positioned, and that's why we have a liquidity. But the market needs to grow or become a regulated market. There are things moving forward. Corsia, BTI, even want to market. There are good developments, but I'm really a fan of the regulated one.
Are you more bullish on the market now than you were a few years ago? Like 3-4 years ago when you came into it? Or did you think it was easier back then, like you were going to sell earlier? What is your current feeling on the carbon side?
We can discuss here, prove whatever we want here, right? We can prove it's going upwards and going downwards, and that's exactly what long-term market is. It depends on your mood in the morning. You drink coffee or you didn't. I don't want to see it this way. I take a little back everything. People need to solve three things: how we produce electricity, energy, how we transport things, and how we make food. If we don't solve these things, we
Or toast?
sorry for my French toast. So we need to do something, right? And that's one thing. And the other thing is someone needs to pay for it, right? The electricity change happened because there was economical reasons for it. Here in agriculture,
we created the one. So it's interesting, I think, and there's an interesting analogy there. Like Germany to a certain extent, with some feed-in tariffs, and of course China have created exponential technology that is now like off to the races. But it took 20, 30, 40 years. Like I don't think anybody that invented the first solar panel that went on a satellite could have imagined that there would be houses covered and fields, and it would be the fastest growing and cheapest in most places, if not all places. But I think we can learn there as well, because now it's an industry that you can invest in. You could put billions to work if you wanted to. And people are doing that. And regardless of whoever is in office, in certain places, this will continue to go. I think Saudi Arabia was the biggest buyer of solar last year. Pakistan is not far behind. India, like these make economic sense in a lot of places. I'm always wondering, what do we need for agriculture to get there? What do we need to, partly on technology side, on finance side, to make it such a logical step? We're not there yet. I think we're getting there. I think you're showing in data that it's absolutely, in your context, way more profitable, and we're foolish for not backing that, even without carbon credits. And so and I think we need people from the renewable energy space that have done this, that have created a market, that have regulated it, that have pumped billions into it, to come to food and ag and help us as well to figure out, okay, what are the next steps? Like what were things that you thought 20 years ago when you were financing the first PPAs, or 15, 20, yeah, probably 20, power purchase agreements? Like how did you unlock a market? Like how do we do that with here, etc.? And actually it leads to a question. Do you see on the market side of the crops, like the farmers, do you help your farmers with that? How do you see a role for accessing more interesting premium markets? Or do you see any kind of, because you say somebody has to pay for it, could be partly carbon credits, could also be commodity buyers that want certain crops with a lower carbon footprint, which of course means you cannot sell the carbon credits. But do you see a potential on the market side of things of the crops, not just the carbon credit side?
Once again, the question is a pretty long one. What we realize is that one of the reasons as well why farmers have low margins is that the margins stay with the big ag companies, fertilizers companies, and the buyers of the yields and harvests. What I would like to achieve is to reduce the dependency of the farmers from these two organizations, right? And in a way, wanting carbon market gives that chance. If let's say, Microsofts of the world are paying farmer to do good for our environment and create more healthier food, what's wrong with that? The farmer has a preferred organization to speak to, right? So I'm really a fan of not current market players pushing farmers to what's good. Because I hope you get my point here.
Yeah. Why would you trust Cargill or a fertilizer company to work with you on Regen Ag while their incentive is sell more of that or buy your commodity at a lower price? And it's like Shell telling you to buy this more efficient petrol for your car. Yeah, probably. It's a nice marketing spiel. And so you're not doing anything on the market side of crops. You're trying to circumvent that and say, okay, what if we give farmers more space, margin, and breathing room? And who knows if they access other markets, which would be great. Higher paid markets, which is great for you as a loan provider. Of course, you want them to get more money for their crop.
True. So yes, the answer is no. We don't engage in farmers helping them market their products, sell it for a better price. We're not there yet. One day we will be able to provide a certificate that this farmer is regen maximalist and his food is very safe and nice and healthy. But I don't think that we're there yet. And
for now, no. And so why should people look at the region you're active in, Eastern Europe? You said it used to have one of the best soils. Is it also the place with the most potential for the carbon side and in terms of farming, let's say industry or farming potential? Like why are you so bullish on the region or the countries you're operating in?
Basically, the idea is the darker the soil, the more it can absorb organic carbon. So for us, we follow, effectively there are two soil streams which are suitable which work as a pool to sequester carbon. So that the one starts in Russia, goes through Ukraine, Belarus, and then Lithuania, Poland, and north of Germany, north of France, north of Spain, and England. That's one stream. And the other one goes from Latvia, Lithuania, Poland, Hungary, Romania, Bulgaria. So there are
to the Black Sea, yeah,
and of course Ukraine. A larger one, where both of the streams collide. That's where we plan to operate mostly, because there's a lot of potential to them. And that's where the soils are damaged as well. In some cases, the data shows that we found, or there should be around 150 tons of organic carbon per 1 hectare, and we find only 30 tons. So that's how much is lost during the years of damaging the soil. But at the same time, this recovers most quickly. So basically, the soil is hungry for regeneration. So, and that's data which we have. So
and really good growing conditions, like adequate water, adequate sunlight, easy terrain, relatively easy terrain, not crazy mountains or crazy hills, and all of that, which makes it just easier to get to scale and why you're working with so many hectares already.
But at the same time, when I first traveled to talk to farmers about climate change, I thought that they're going to shoot me. And that's what two of these guys say. Yeah, I know. They say
they see it every day.
They see it, and they agree. So that was very surprising for me. Oh, there is a group of people who actually believe in climate change
and want to do something about it because it's their livelihood that's on the line. And now switching gears a bit to a few questions we always like to ask, and let's say the finance community. You've talked to many investors, from the largest institutional ones, European Investment Fund, to many retail. Many people have invested through HeavyFinance into these loans. What is your main message to the finance world? What is your main, let's say I'd like to ask this question. Let's say we do this in a theater, in the financial capital of Vilnius, a nice theater where the room is full of institutional investors, but also private investors. Of course, a lot of stories, great food, but what should they remember? What is your main message to the financial community at the end of the evening? Something that, hopefully they do something the next day when they're sitting at their desk and they didn't forget, because people forget. So what's your main message to the financial community? Of course, through the podcast, but let's say we do this in a live setting.
So the first thing what I do in these environments, I remind them where the food comes from, where their wine comes from, where their champagne comes from. So that's these hardworking people. And look, I'm not trying to be here nice and cute, but these are very hardworking people who deserve some respect. That's the first thing, right? Because we stop respecting the people who generate us food, then they lack it, right? Look, the suicide rates of farmers are huge. These guys barely make money working 12 hours a day. And then we still have this, oh, you guys with the nice tractors go, don't even come to our cities. and then we eat their food. So we need to
Respect.
get back to the bond with the farmers, and that's maybe how we get back to the bond with the nature. Small things, small steps need to be done, and first of all, we need to change the mindset of city people. That's why we are very happy with our platform that retail investors can invest, can see. Maybe one day we will create a marketplace that the farmers can sell directly to the same communities.
That's a lot of work. Like, I'm not against it. We've had like many attempts and failures around that. It's super important. Shout out to Ubi and Dirty Clean Food and many others. But it starts with the stories. You're right. It starts with respect and even seeing a farm. Like, how many people know an active farmer and know the issues, the opportunities, the challenges? Yeah, we moved to cities and disconnected from that.
Yeah, last year we did actually take a full bus of our investors and we just went to visit farmers, and everyone enjoyed it so much. The rich individuals just bumped into the bus altogether and then went for a ride. So that's fun.
And flipping the question or the conversation and putting you in the investor seat, we like to ask this question: what if you had €1 billion in this case and had to put it to work? What would you do? And I'm not asking exact investment advice, obviously, or buckets or exact numbers, but I'm looking, what would you prioritize? Where would you, in how many pieces would you cut it? And what would be your main areas of focus if you had €1 billion to put to work?
Billion, I think, is a little bit too little for my idea, but
I had a sense you were going for more. Yeah, but go. Yeah, you can leverage.
No, exactly. What I would do with a significant amount of capital, I would short against fertilizer companies. I would bet against them, and that's what I would do. And then I would go and hunt them for over fertilizing our land, polluting our food, and they're damaging. They literally make money on damaging. So that's completely wrong. And I think we can prove that. I think they're doomed to drop in sales, basically. Otherwise, they need to switch to organic fertilizers. But let's not look for enemies here. If the investment is in agriculture space, then it's Regenerative because it makes sense. It just, the yields increase, the cost decreases. Why not? If it makes sense, then it makes money.
And if it's not in ag and food, anywhere else, what excites you beyond
They
that?
don't want to hear it. I'm a Bitcoin maximalist.
Everything in Bitcoin at the moment. That would be the leverage, could be the leverage. And we covered it a bit, but it might be something else. We like to ask this question, inspired by John Kempf: what do you believe to be true about regenerative agriculture that others don't? So where are you contrarian in that sense? Of course, you talked about the profit side of things, that fertilizer companies should disappear. I think many people agree. But like, where do you, as a finance guy in this world, what do you believe to be true about Regen Ag that others around you, let's say, don't?
Maybe I'm wrong. What bothers me is that it is simple. Like, there's nothing complicated there. It all makes sense. If you switch, you make more money, and it's good for environment. It just needs some knowledge. So I believe that it is simple. That's what I believe. Everyone is trying to overcomplicate it, but what's hard in it? Which part you don't? Show me that. What doesn't make sense here? Because I'm not educated in the field, maybe I don't understand nature, but from data perspective, everything makes sense. That's my belief.
And you're seeing the results in the field with the farmers you work with.
Yeah.
And as a final question, which usually leads to other questions, but if you had the power to change one thing overnight, so it could be anything from banning fertilizer to global consciousness to better taste. We've heard a wide range of answers to this question, to the magic wand question. But if you had the power to change one thing, but only one, what would that be? Could be in food and ag, could be beyond that, but what would you change?
Anything.
But only one. So it's not Aladdin, you get 3. Yeah.
That's a goal, because I want to change so many things. But let's stick to our podcast and let's not be too much of the dreamers. So I would just make the plow disappear.
That's a very interesting one. Yeah. Would be a bit of a shock for many people.
They would see They would see
not impossible to overcome, indeed. I don't know if you've ever been to Groundswell. There's a big Regen Ag festival, basically, in the UK. Mostly farmers, like 7,000 people, mostly farmers. And at the parking, they used to have, I don't know if they still have it, like a big plow. standing up like that with a rest in peace sign underneath. So everybody had to park there, walk past that thing to the entrance of the festival, just to remind people about, of course, there are ways to shallow plow. I know, don't start emailing people, please, because some people are it depends on the context, but most of the times deep plowing or plowing in general or soil disturbance is going to lead to a lot of issues, and we're trying to prevent that. I want to thank you so much for coming on here. Be conscious of your time. Wrapping up, learned a lot on the finance side, the loan side, and what a FinTech guy is doing in Regen Ag. They might have not laughed at you, but not really welcomed you super nicely at the beginning, but I hope that has shifted over the last years, and you seem to be on a trajectory of reaching way more people, way more hectares, and getting a lot more plows, let's say, forgotten or parked in a shed or maybe sold, or at least not used anymore. So thank you for the work you do. Thank you for coming on here to talk about it.
Cool. Thank you so much.
Thank you for listening all the way to the end. For show notes and links discussed, check out our website, investinginregenerativeagriculture.com/posts. If you like this episode, why not share it with a friend? And get in touch with us on social media, our website, or via the Spotify app, and tell us what you liked most. And give us a rating on Apple Podcasts or Spotify or your podcast player. That really, really helps us. Thanks again, and see you next time.